Like every other bond problem, we need to do some figuring before we start to figure. Let's take a look. We're doing exercise 9.6 here. They tell us this company is going to buy $26 million, or issue rather, $26 million face value bonds. So that's the face value of the bonds, $26 million. They tell us that those bonds will have a face rate or a coupon rate of 7%. So the face rate or the coupon rate is 7%. Additionally, they tell us that they're going to issue these bonds for 10 years and they're going to pay interest twice a year. So that's 3.5% twice a year. So we need to figure that out, to figure out how much the actual check is that they're going to be sending out. So we need to take 26 million times 7% times 1/2. And when we do that, we come up with $910,000. So twice a year, this company will be writing $910,000 worth of interest checks. So we've got that piece. And now we need to know the number of periods. So the number of periods, using Excel speak, N per, number of periods, is 10 years, 2 periods per year, 20 interest periods. So now we can figure out what we're doing with this bond. $26 million face value, 7% bond, pays interest twice a year. The interest checks each time they write them are $910,000, and they'll do that 20 times during the 10-year life of the bond. So now we can fill in the pieces. We have them all. The payment is $910,000, and they tell us in this case the market rate is 6%. So we take 6% divided by 2. That becomes 0.03 or 3%. And the periods to maturity are a total of 20. So now we can go back to our calculator. And again, same problem. If I can see it, you can't, and vice versa. So we'll clear, go to apps, go to finance, TVM, time value of money, and we've got some information from the last problem we did. We need to change that. So the N now is 20, not 40. So we change the N to 20. The interest I need to change to 3. Got to start over because I poked in a wrong number. The N is 20. I wrote 203. That would be a really long bond. And then the interest is 3. And the face value is 26 million. Or the next thing, it comes to present value, and we'll just leave that. We have to make that A and come back to it. The payment is $910,000. The face value is 26 million. 1, 2, 3, 4, 5, 6. And now we'll go back up to the present value, which is what we're looking for. And we'll make that alpha, that's what we're looking for. Hit enter, and it tells us that this bond will sell for $227,934,072. That's 9-6, part 1.